Happy Hump Day, everybody! Welcome back to another episode of Benzinga Live. I think my voice is a little bit more back today. I think I can speak a little bit louder. I feel better, so hopefully sound better. But probably still recovering a little bit. But hope everyone's having a good Wednesday so far. It's a you're fine. Don't worry about it. That was Javi, who is in our office from Argentina. Say hi, Javi. Hey. What's up, Javi? And if you're wondering why Javi's in town, so we have our cannabis capital conference next week in Chicago. If you're in the area, if you're interested in coming to see us, coming to hang out with us in Chicago, I'll drop that link in the chat. Hopefully, we see some Zinger Nation out there. But yeah, I mean, man, it's been a good day so far. The market is up. Nasdaq, the Qs are up for the first time, and I want to say in 7 days. I mean, we've had days where it's been up, but as far as closing prices, we've had, I want to say, 6 or 7 red days in a row closing on NASDAQ. So today we look to be breaking that streak, watching the Qs kind of pushing up higher here, almost up a full percent, making new highs of the day. I'll get my Benzinga Pro shared. We'll do a rundown of all the overall indices, see what's going on there. If anyone has any stocks, any trades they would like to check out, let me know. Quick rundown on the show today. We will be having Gav from Wolf Financial join us. You may know Gav from running a lot of Twitter Spaces. Always good to catch up with Gav. He's got good experience from Goldman Sachs and now, of course, running Wolf Financial. So always good to speak to him, see what he's been watching. And then kind of, I think David Green is going to join us again today, 2 days in a row, which is rare. But David wanted to hop back on and talk a little bit more about his webinar he's doing tonight. So we're going to talk to Dave. We're going to talk to Gav. We're going to talk to, we're going to look at stocks. We're going to have a good day. We're going to have a fun show. So smash the like, subscribe. Let me know in the chat. Yeah, shout out. Sorry, I'm going to butcher this name. Saeed Gaimi. Shout out Saeed. See that helps. Give me a couple stocks you want to look at. We'll go through those. USO. Jan wants to check out US Oil. Arrested Development. That's a great show. I don't know if I ever finished. So I watched Arrested Development, like streaming it on YouTube, or not on YouTube, on Netflix when it was on there. Like, I don't know. I was like young. But then when they rebooted it and came back, I don't know if I ever watched those seasons. So I don't know if those are worth watching. All right, guys, let's go ahead and roll that intro, get the show started. When I come back, we'll get my Benzinga Pro pulled up, and we'll talk some shop. We'll talk some stocks.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a breaking news.
Alrighty, y'all. So like I mentioned, I've been mainly watching the Qs today, NASDAQ Tech, because I've been anticipating some sort of a little bounce. If you guys recall, we talked about with David Green and as well as Steve Kalasian, just looking at the charts, seeing that we do have some, it does look like we could potentially go back and test those bottoms that we saw in mid-June. We saw the SPY get down to around 363 or so. But I still think, and Steve Kalasian kind of agreed on this, that even if we do end up getting back toward those lows, back toward those bottoms that we saw in mid-June, I think we might see a little rally before then, and maybe that's kind of what we're seeing today. I mean, you can't call today's action a rally. If anything, it's just a relief day from, we've been down here. So I'll pull up SPY, good old SPY. And yeah, I mean, we're on the daily candles here. You can see big red day on the 26th. Whoa, down 3.3. I don't even remember this day. Down 3.38%. But anyway, you can see here we went from around 420, dropped back down, hit lows yesterday of 388, bouncing back a little bit here, trading up 393 right now. I don't know. I mean, I'm not coming out here and saying like, okay, we've got a green day and there's some support right here. I'm going super bullish here in the trend. I still think there's a little bit of a bearish trend that has been established since mid-August, so almost the better part of a month right now. Yeah, I think that's it. Like we've wiggled up. Oh, you're saying, Cressel, that this is a little rally. I maybe, yeah, I think maybe you can. I don't know. I think, if you're cash right now, if you're on the sideline and you're looking to swing trade and you want to go long, I'd wait for a little bit more, conviction. Like maybe we come back up here, start making higher lows, and then, I mean, I say this, but at the end of the day, it depends on your timeline. I say this pretty much every day. Like I'm investing for the long term in my long term portfolios, and of course I'm buying down here. Like I know I'm okay with buying the S&P even if it's in a little downtrend, because eventually that trend's going to reverse and it's going to start making new highs, and I'm going to make money off of that. And that's the end goal of investing and trading stocks, is to make money. And really, the most surefire way. It's not sexy. It's not super exciting. You're not going to get rich overnight, but your most surefire way to make money in the market is just by investing on the long side over time. And with that said, I mean, there's two different ways people kind of dollar cost average in. And what I would say is, if you're sitting on a huge chunk of cash, I think it's better historically. I think, a lot of investors, I think the math checks out that it's actually better to just put all that money in at one time, kind of not dollar cost average. Of course, if there's in certain times, right, if you're super overextended and everything's super expensive, then maybe you do not want to put that money all in at one time. I think, though, in general, that dollar cost averaging isn't necessarily great, but the dollar cost averaging that I'm talking about is when you just take a little bit off your paycheck every 2 weeks and add it to it, and I think that is the best way to do it. Yeah, I mean, of course, it's going to depend on your entry. I'm just talking about over time historically. I think people have done the studies and like crunch the data, crunch the numbers, and actually determine that your returns, you're better off essentially just if say you won the lottery and had $1 million sit in cash and you were going to invest all of it. I think the studies have shown that it's better to just put all that money in at once. Probably maybe something to do with dividends. I don't know. Rather than doing 100,000 at a time, 10 months in a row. But of course, there have been times where if you do the latter, if you do the dollar cost average, then doing it, breaking it down is better. Jay Rice saying market was oversold 7 days in a row. Bonds, BTC, green, dollar went red. Not super bullish, but do shorts really want to hold going into CPI next week? Yeah, and that's where I think too, Jay, and I agree with you. I think there are a lot of things out there that maybe aren't great for the market, great for the economy right now, maybe not great signs, but you have to think about, we've had different bearish headlines over the past 6 months or so that have brought shorts into the market. And, I talked about this yesterday, but that bear case has kind of started shifting, where, 6 months ago, right, it was all about inflation, and eventually inflation is going to hit the consumer and consumer spending is going to take a hit. And then a lot of those same bears are now talking about how, it's going to be the Europe energy thing. And it's like, okay, right. I really do think almost, and I think to Jay Rice's point here, is if you're short here, and then bless you, and then like next week when we get the CPI news, if we start getting news that some of these big bearish macro headlines around the world are starting to get better, and I do think there's a lot of signs too that even in Europe, even in Germany, kind of the energy situation, it's bad, but it might not be as doom and gloom if or as some people would make you believe, right? I've seen like posts and stuff from some people talking about the energy situation in Europe that really are trying to act like the whole European economy is going to be shut down all winter. Which, if that's the case, yeah, we're going to probably see a big global recession, and we're going to see stocks come down a lot. I just don't think that's going to end up being the case. Could I be wrong about that? Of course. Been wrong plenty of times before. I'll be wrong plenty of times in the future. But I'm willing to make the bet that things are going to essentially stay normal and be okay, rather than okay, shit's gonna hit the fan and you know, we're really gonna see these things. And maybe I'm ignoring some of those signs out there, but I'll bring up some of that data that I've been looking at. Yeah, exactly. I think it's just FUD. That's exactly what I think it is. I want to see if the sentiment survey is out yet. Nope. Okay. So week ending in 8/31, I believe sometime today or tomorrow we'll get. Okay. So it's going from Wednesday 12, so basically Wednesday night, and then we'll be able to see the sentiment. So the reason I've been looking at this, and this is from AAII, the American Association of Individual Investors. Anyone can sign up. I think it's just $2 a year or $2 a month or something. I have no clue. But what I think is cool here about looking at this data is you can see how the sentiment has been shifting over the past few weeks. And oh yeah, Evan Spiegel is on CNBC. We'll do some updates there. But basically, what I think is interesting here, you can see on August 10th, so about a month ago, right? 36% of people were bearish. So more bears than bulls, but 32% bullish, pretty split across the board. This is among retail investors, individual investors, saying basically 33% are bullish, 33% are neutral, 33% are bearish. For context, the S&P 500 on August 10th was, this was about a month and a half, almost 2 months into that rally that we got from those mid-June lows. So June 16th, June 17th, SPY was at around 365. August 10th, the S&P 500 was at 420. So between mid-June and August 10th, the S&P 500 had gone up about 15%. That's not nothing. That's a big move in a month and a half, in 6 weeks. Keep in mind, the average of the S&P appreciates about 10-11% annually per year over time. That's like its annualized return. So the fact that it went up 15% in 6 weeks is very significant. I mean, that's a big move. And you can see kind of what happened there is people got more bullish from that. And then we started to roll over. The SPY started to roll over, hit highs on, I'm looking at it right now, Tuesday, August 16th. So you can see people got a little bit more bullish the next week, and then right when we topped out, the market started coming down, sentiment started to drop. And this is what I think is so interesting, is it's not, I think it's like the sentiment follows the price, right? Now that the SPY's come down, people are less bullish. And we talked about this last week too. I want to see, right, if I see this number tick up even higher this week, which I anticipate it will. When I say this number, I'm talking about the percent of retail bearish. When I see that number tick up to 55%, 60%, that's going to be my sign to be like, all right, yeah, now here's where I'm going to go long and really, put some of this dry powder to use and say, hey, even if everyone else thinks the world's going to end, I'm okay with buying some Qs here or buying some SPY here, knowing I'm going to hold on to it for a long time. Again, right now, I'm not talking about swing trades. I'm talking about like long-term investing. We can talk some more about trades. Closer to 8%? What you mean, Jay Rice? Oh, are you talking about the SPY went up closer? Maybe from the mid-June lows to now, yeah, we're up about 8%. I was talking about to that high on mid-June. So here, I'll zoom in a little bit. So I was talking about from here, August 16th, when that data was. You can see from June 16th to August 16th, about 2 months. Well, I was really doing August 10th, which was about 15%. That's what I was saying, is that's a significant move from June 16th. I mean, even more significant from June 16th to August 16th. So 2 months, 17.2%. Now, of course, from that high to now, we've come down about 8%. Oh, long-term returns, 8% a year. Okay. I think it's been, I could be wrong, but maybe that's going back like years and years and years. I want to say for the last like 20 years or so, I don't know. I mean, this quick Google search. Average annual return of S&P 500. This is saying around 12%. So I don't know, 8%, 12%. Either way, the point still stands that was a big move to make in 2 years. All right, guys. I see my first guest hanging out in the background. Been trying to get Gav back on the show for a while, but you guys know Wolf Financial from Twitter. If you're involved at all, if you join Twitter Spaces, Wolf is the best account to follow. If you're interested in these spaces, Gav is a buddy of mine. We've met on a couple different conferences, but he's on there all day running spaces. It's very impressive. If you're in, and what I think is cool too, and I'll talk to Gav about it too, is I've been seeing him kind of branch out, doing some spaces about some things that aren't necessarily just about stocks, which I think is cool too, because I spend a lot of time on Twitter, right? My friends and anyone who's on Twitter, or maybe you're on FinTwit, like you get it if you get it. For my friends that aren't on Twitter, they don't get it. Like, why are you on Twitter so much? And it's like, all right, you just don't get it. But that's okay. Well, let's go ahead and give Gav our very special Benzinga Live intro. Get him on the show, see what Gav's been watching, see how he's doing. Mr. Gav, happy Wednesday. How you doing?
Happy Wednesday, Aaron. Living the dream. Good to be back.
Hell yeah, man. So yeah, if I tried to give you a little brief introduction there, but for those who may be new, who aren't familiar, I don't know if you want to give a brief little introduction. You've got a cool story, you know, coming from Goldman, starting your own thing, really taking this Twitter Spaces thing and running with it. Yeah, I'll leave the floor to you.
Yeah, I think you hit the nail on the head, especially with everything that I'm doing now on the Twitter side of things. So if anyone's familiar with Twitter Spaces, they've probably seen some of mine, just at Wolf_Financial on Twitter. I pretty much just host live audio-based educational forums for about 40 hours a week. And you're right, a lot of them are stocks, a lot of live trading, but we also branch into real estate and crypto, Web3, bunch of other topics. So yeah, traditional finance background, but kind of mixing it up nowadays on Twitter Spaces.
Yeah, and the one that I saw, I want to say it was either last night or 2 nights ago, you were on a fantasy football one.
Yeah, so we have some fun as well on the Spaces for sure with what we do. So I'm a big fantasy football fan, and every year I try to put together a couple of leagues. I'm actually commissioner in 3 leagues this year, and one of them is on Twitter. I wanted to get our friends together, and I figured, hey, you know, we're all going to draft anyways. You know, I kind of want to make sure that this draft has some process to it, and I don't want it to get too mucky. So let's just do it on Twitter Spaces, where everybody will be kind of peer pressure to make their picks faster. And we'll have some good time talking. And like 80 people sat there and listened to us the entire hour and a half as we drafted, which I thought was kind of funny.
How many people were actually drafted?
There were 12 of us, 12-team league, standard ESPN settings, PPR, and I had the #1 overall pick.
There you go. Yeah, and I remember, was that yeah, that was last October. We were in Orlando for the FinTwit. Is that right? A year ago?
It was in October when we were at the FinTwit conference, but we were at part 2, I think.
In Vegas in May.
Yeah.
No, but I was talking, but in October, it was during the football season. I remember on Sunday we went out and watched football. You're a big Ravens fan, right?
Big Ravens fan. I've got tickets to the season opener, and I'll be hitting a few of their games on the betting side too.
Hell yeah, yeah. Well, we'll have to do that. Once we get. I mean, the season starts tomorrow, but once we get more into the swing of things with NFL, maybe we'll bring you on. Honestly, it'd be fun, Gav, to bring you on like once a week, and we can talk stocks for a few minutes. We can talk some bets because, you know, we've done a lot some more sports betting content on this show, on Benzinga in general. I think NFL is the one that gets people the most excited, and I know there are people out in the audience right now that probably aren't happy we're talking about football or sports betting right now. And I promise we'll get to stocks, but I do. I do want to talk about football for like 2 more minutes.
Hey, there's some stocks that overlap too.
Yeah, I mean, of course, this year you've got Amazon streaming the Thursday night games.
Yeah.
I mean, see, that's the thing to me is people talk about these things and people I saw people talking about like, oh, I'm going to buy Warner Brothers Discovery stock because the new Game of Thrones is so good. And the thing to me is like with Amazon, like even if you love the fact that they're dipping into live sports, like the company's so big, like how much is Amazon streaming NFL football on Thursday nights going to impact like Amazon's earnings and like bottom line at the end of the day?
Yeah, probably not so much for a giant like Amazon, but more effective for companies like DraftKings and Penn and others as they go into the season. They really see revenue ramp up.
Yeah, yeah, yeah. And I'll get my Benzinga Pro pulled up, and we'll chat about some of these stocks. But going back on the fantasy side, real quick. I mean, the Ravens last year, it was kind of the Ravens were that team preseason that like lost all their players, right? J.K. Dobbins hurt. How are you feeling about the team this year?
Yeah, regression is something that you see both in the stock market as well as in football typically, and I'm hoping for some positive regression here. Ravens were by calculated by Warren Sharp, who I love. If anybody is familiar with him, he's great with analytics. The Ravens lost the most games due to injury in a season last year. That was the most games ever in a season lost due to injury. So, with that being said, they still only missed the playoffs by one game. So, I'm very hopeful, but my strategy is I'm going to go to games early in the season so I don't have to worry about as many players being injured. I'll hopefully get to see them in their prime early in the season, and then I'll pray for later in the season.
Got it. And then as far as like fantasy players, have you been like I was in a draft. I was in a draft last night, and I was like looking at J.K. Dobbins. I was like, he's coming off an ACL. Like, have you been staying away from Ravens players? Have you been drafting some?
Here's how I did it. I did 2 leagues where I don't think I took any Ravens players. Maybe one I took Mark Andrews, and then I
Okay.
did 1 league where I stacked Mark Andrews, Lamar Jackson, and J.K. Dobbins.
Okay.
So I did.
So
I
if
did. Yeah, diversified my portfolio.
all right, so in that league where you stacked all the Ravens, if they score 10 points in a game, you might not have a great fantasy week.
Could be a bad week, but my strategy with that team was pretty good. I think I went super running back heavy. I did RB, tight end. I don't think I took a wide receiver until Brandon Cooks in like the 4th or 5th.
Oh wow.
So I feel
Actually,
pretty good.
in my league last night, we had a kid draft Mark Andrews over Travis Kelce.
Which, by the way, is the ADP currently on ESPN.
Really?
Yeah.
Andrews is going ahead of Kelce.
Andrews is being drafted 2 spots ahead of Kelce on ESPN.
Okay. See, I'm from Missouri, from St. Louis. We don't have a football team, but a lot of like my college friends and stuff are Chiefs fans. So I think a lot of the Chiefs players end up going like earlier than they even should in my drafts. Like Mahomes goes in like the first or second round, Travis Kelce, like whatever. But all right. Yeah, if anyone has any like football questions, fantasy, throw them in the chat. Maybe we'll get to them. I see Crucy in the chat saying Eagles going to the Super Bowl this year. We'll see. But let's flip over to stocks real quick. So we mentioned the betting stocks. I actually have the Bets BETZ ETF pulled up right here from Roundhill.
Mm-hmm.
I mean, this thing's gotten absolutely clobbered from last. I mean, this was one of the. It opened during COVID, June 2020, ran all the way up to about $35. Kind of as we saw DraftKings, Penn, all these other stocks run up, and really hasn't done much in really a year. Look, where I'm at on the chart right now is last September. This is when we started last football season, 32. We haven't come close to come back touching those highs. We did get a nice little rally here with the rest of the market, but now we're back to $14. What's your overall like view on these gambling stocks as a whole?
Yeah, I think Roundhill is definitely an interesting one. I've had some good conversations with Will Hershey, Tim, the rest of their team. The top 5 holdings in Roundhill are interesting because, I'm not actually super familiar with all of them. If you look at this ETF right here, the top 5 holdings are Flutter, Kindred, Penn, PointsBet, and then to be honest, I'm not even super familiar with the last company. So there's a couple of pieces that I'm not so familiar with it, which makes me lean towards wanting to maybe like more be an individual stock picker and stuff like that. But yeah, I think the market overall is still developing. We're seeing more partnerships being struck with the NFL on a regular basis, right? They're being much more open and welcoming to it because I think what they realize is that the market exists regardless. And now that they want to take a part of it, it's going to grow. So I think that sports betting companies do have, a good run ahead of them. When you look at something like a DraftKings, like a Bets and others like that, they've certainly been beaten down with the rest of the market. And, there's a couple reasons for that. The biggest reason has been rising interest rates. These are companies that are heavily projecting off of future cash flows. And as you get a rising interest rate environment, they're growth companies, right? They're going to suffer immensely. They're going to keep falling. But I think at the point where they finish rising interest rates, hopefully not too far off in the near future, and you're in football season, and they continue getting more partnerships, and the best separate themselves from the rest, right? And kind of show a moat or something else like that. I think that they could be, good long-term investments down the road, because more and more people are getting into, sports betting each year. There's more money being put on it. It's becoming, more entertaining. There's more podcasts about it. There's more media about it. It's becoming very ingrained in the game. And I think the last 2 years were the first time that they actually had announcers on game saying, hey, the line is minus 180 on this. And you see the XFL. I've got some friends that I think they're going to be playing in the XFL this year. That's back, right? They're very forefront with, we are betting, we are putting out the numbers and all that type of stuff. So I think that they're going to benefit from future regulation and introduction and stuff like that. But yeah, right now they're just heavily suffering because they're growth companies, again, just very much their value is based off of those future cash flows. And as you start raising interest rates, those are worth much less.
Yeah, and I see Jay Rice in the chat saying gambling ETFs remind me of pot ETFs. Nice concept, but very few of the names are profitable. Yep. I agree, and that's the thing is I think with a lot of these industries that are so new, is there's such a thing as like being too early as an investor, right? Like if you look at like the cannabis market, like you could be right in 20 years that Tilray is, now this national brand and making a lot of money, just like DraftKings or Penn might be. But if you're buying the stock at 30 and then it goes to 5, it's essentially like being early is the same thing as being wrong. And I think a lot of these companies, what the criticism, what the knock on them has been that, DraftKings, Penn, et cetera, have been all competing in this very saturated market and having to offer, these incredible deals and spending all this money on promotion, that it's really like, all right, when are you guys going to be able to make money instead of just spending all this money to try to capture market share?
Yeah, for sure. And right now I don't own DraftKings or Penn. I think, right now what I do is I actually have some bets, but I actually loan out the shares. So I actually make something on top of that. So I'm not
Wait,
just
you have some what you said?
I loan out the shares. I
You have
own
some
bets.
debts, you said?
What'd you say?
Oh, you own bets, BETZ,
I
the
own
ETF.
bets, BTZ, but I loan out the
Okay.
shares. So I'm basically making on top of those. And I don't right now touch, I think he's correct, exactly, right? There's a lot of names in the space, few are going to be profitable. However, the slight difference I see between cannabis and sports betting, which I completely agree are great industries of the future that have a lot of potential. The main difference is when you legalize cannabis in a state and you want to set up operations, there's a lot of infrastructure that has to happen, right? People have to build out the stores, they need to supply chains, they need everything like that. Sports betting, I think, is a lot simpler because one, it's already happening. It's already established. There's billions and billions that are bet on the black markets. You can go to bovada.com, right? There's all these different spots already. Once it becomes legalized and people get those incentives to get on, it's just, the click of a button. It's a download of an app, right? It just becomes legal in the state. Now you can download and play and it's not geo-locked. It's a lot simpler than the cannabis industry, which I think takes a lot of infrastructure. So right now, I'm still not touching these names. I personally don't like holding on to names that are in a downtrend, kind of regardless of the industry. But I think that it has future potential. And as someone who's a passionate sports fan, I'll certainly be keeping an eye on it.
Beautiful. Let's see. I know, Gav, one of the other things we were talking about off air before you hopped on was you've been looking at some solar stocks, some clean energy.
Yeah, solar stocks are killing it. And I think this is just an eye for relative strength. And relative strength has been the name of the game the entirety of 2022. And it's crazy to think that we're 9 months into 2022 and this market, which, by the way, fun fact, this is the worst performing year, I believe, on record for a 60-40 portfolio. I don't know if you saw that stat.
It makes sense. I think that's the first I heard, but bonds have been absolutely terrible. And maybe if you have a few minutes after we talk about some solar stocks, we can talk about maybe some macro like bond stuff. I don't know if you're.
I'm happy to chat. Not the most knowledgeable, but I pick up stuff sitting in spaces 10 hours a day.
Yeah, let's maybe if you haven't done one, maybe that'd be a cool one to do. Is like understanding like bond basics like 101, because like I really don't. I don't know. I was looking at this like TLT chart, the 20-year Treasury bond ETF, and it's just like I don't understand. Like someone saying like, oh, it goes down when the bond yield goes up. Like I don't. Here's what I do know is I understand when the bond yield goes up,
The
it
prices
makes
go
stocks
down.
go down usually.
Yeah. I mean, there's somewhat of a correlation there. More of a correlation with yield and price, specifically of bonds, for sure.
Okay. So there we go. I don't know. All right, we'll go back. We'll go back to solar for a second because I think both you and I might feel a little bit more comfortable talking about the solar stocks than bonds. But I've got the TAN ETF pulled up right here. You can see, like you said, showing some relative strength here. Have you been trading any individual names in the space?
Yeah, mostly individual. I haven't really touched TAN. The three main ones that have been on my radar are ENPH, which is Enphase,
Yep.
JKS, which is Jinko Solar,
Yep.
and then FSLR, which has been on an absolute tear. I mean, just for anybody interested, just take a look at just the last few sessions here on FSLR.
Oh
In
wow.
yeah, 1 month it's up about 116%. And
Wait,
I think that
it's up 100% in the month.
yeah, look at that last
What?
month there.
Yeah, I've been going from 63. Yep, I guess that's 100%. Checks out. Why is this company? Why is First Solar? Because like, all right, here, let's go back to looking at the chart here. First Solar. I'll zoom out for a second. We're on daily charts here. Here's First Solar. Go back to Enphase real quick. Okay. Go back to what was the other one? Jinko.
Right. And the reason, by the way, that they're all getting a bid was the Inflation Reduction Act. And what that did was it actually gave them manufacturing credits. And that's what started this whole piece. So when you saw that Inflation Reduction Act come out, that became a major catalyst for this stock, for MPH, for Jinko Solar. That's why you're really seeing a big move. And it looks like First Solar was one of the bigger ones to benefit from this. But they also were coming off of pretty good Q2 earnings. They had revenue beat, they had earnings beat. There were some problems with logistics turbulence and some project dynamics that hurt a little bit with like the guided EPS. But once this bill came in and they had just beat top and bottom line, it was a pretty big catalyst for them to go ahead and just start shooting upwards. And now you've seen, I mean, this is something that we've been trading on Spaces for a while. I think the big key move for us was coming through the 200 day. If you look the last time that this broke through its 200 day, it had a little bit of a waverance around that June, July 2021 area, but then it just really just shot and basically did the same thing. Last time it broke through, it made almost 100% move. And then you see it come through the 200 day at 82, and it is just pure skyrocketing from there. And if people wanted to be, safe and careful, they could even have set a stop on like the 20 day or something, right? If it pulls back, I'll get stopped out, but it's never even really come close to it. So that was the big boom for these, was that bill coming through that really did a lot for them, specifically with this manufacturing credits.
Yeah, and what I'm curious about, or at least I'm noticing that I think we might be able to find some takeaways from is looking at Enphase, looking at First Solar, these companies, and like you said, I mean, I think Enphase also was coming off some really good earnings the last quarter, but these companies are making like new all-time highs on their stocks, but not every solar company is, right? I was looking at Sunrun, which is one that I own a
Started
decent
moving
chunk.
today.
Yeah, but I mean, like,
I
look,
missed the trade on that. Kind of hurts. Oh, Sunrun. Never mind. I was talking about SunPower. My bad. Sunrun I
oh,
saw the other week.
okay, well, Sunrun's up 6%. What's the other one? SunPower?
Yeah,
Oh,
SunPower.
up 10%. Yeah, but I
Yeah,
mean,
I was looking at the.
and this chart and Sunruns look very similar, where these are still way below their previous all-time highs, whereas First Solar and Enphase are making new all-time highs. So maybe that's a sign that maybe the Enphase and the First Solars are a little bit further along. Maybe investors are liking them a little bit more here. I'm not quite sure.
Yeah, I mean, you can take a look at the market cap. I think that tells a good part of the story. So, something like SunPower, it's not tiny. It's a $4.5 billion market cap. But when you switch over to like an Enphase Energy, it's $40 billion market cap, right? So
Yeah, and Enphase 40, First Solar about 13, Sunrun is 7. So yeah, Sunrun's a little bit smaller than
right.
them. Array Technologies is one that I also own that I really
Got
like.
leads.
You've got Leaps on Array?
Yeah, I've got them for January 2023, the $35 calls.
Hell yeah, I love it. Yeah, so Array is one that's a little bit different than a lot of these other companies that are actually manufacturing like the solar parts. Array has the technology that like optimizes the solar panels so that they're facing the sun, getting the most sun, but they have like a patent on this. So essentially all the other companies have to pay Array to use their technology. And then I think they also have some like government contracts, so they have some kind of guaranteed revenue in terms of those contracts. So yeah, I've liked the raid, and it's kind of a crazy stock. Like it got down to like $5, then made a move from 5 to 25 in like a month. So it's a fun stock to trade.
Yeah, it's been all over the place, but I've definitely seen people on both sides of the trade, those buying the puts, those buying the calls, but I just don't like buying puts against sectors that are seeing a lot of relative strength at the moment. And, something that's up 100% in a month, I think I'd rather play a put on a downtrend, right? I don't want to try to call the top.
Yeah, 100%. Well, let's see. All right, we touched on solar stocks. As what about as far as any, I'll pull up like the SPY or the Qs, just
Yeah, for
any
sure.
type of, how are you viewing this overall market? Like, you think we're coming back and going to test these lows that we saw in June? Or do you think there's, are you buying? I don't know if you've seen. I'm sure you have because you're on Twitter and Twitter Space all the time. I'm sure you've seen a lot of people that have been on the short side or been bearish, talking about the most recent thing. They've kind of moved on from inflation. Now the most recent thing is like the energy crisis in Europe, and it's going to
Yeah.
cause this whole like global recession. Like, where do you stand in all this?
Yeah, I don't know if it's going to cause a global recession. I think Europe, specifically the UK, is in a little bit of trouble with their energy situation. And I was in a great space yesterday that was hosted by Stock Talk Weekly, and he had a bunch of experts in the area who know far more than I, who came in and talked about it. And it sounds like specifically Europe or the UK is really messed over because of their approach to nuclear, and their nuclear facilities are not going to last, and they're going to have to rebuild them. And that's hurting them very badly, as well as the government's not really listening to the people and what they want in those areas. But taking a look at the indices for just a minute, I do believe that we'll retest the lows. But again, the market's so volatile and all over the place that for me, and more than just whether we're going to go up or down, I kind of have more just my key levels, and then I wait for a break above or below them, and then I trade off of that, because it's very difficult to project out where the market's going to be in a week or two. Even at this point, for me, it's been a lot of anchored VWAP lately. I find that the market's responded very well to VWAP. It's a indicator which kind of utilizes emotion to be on your side, because you're looking at whether people are in the profit or in the negative, and that's often how people trade, right? A lot of people, if they have a trade that's gone negative, the second it gets back to positive, they're looking to cut it, they're looking for a tiny win, things like that. So you can use VWAP pretty accurately just by sometimes tagging onto the lows of May, the lows of June, the lows of July, right? Seeing where those come in. These buyers who went ahead, bought the bottom, are they going back underwater now, right? Are those people that might be looking to get out? That can be a symbol if we go back underneath that to dump. I also like you looking at the unusual options. I know that's a big thing that Benzinga does. The unusual options chain for SPY does not look great right now. It's basically, there's a couple of calls this week, but there are some big boy premiums that are sitting there for end of September, end of October. Just millions of dollars of puts, and they're not in the money either. Like, people are buying out of the money, sizable puts on SPY right now, which is definitely concerning for me to see that. And until some of that clears up, I'm definitely not looking to go too bullish, because when big money acts like that, I try to respect it. So right now I guess I can't. Do you want me to share screen for a second to show what I'm looking
Yeah,
at?
yeah, go ahead.
All right.
Yeah, and I honestly, Gav, like I look at that unusual options, but I find it hard to like. Sometimes I'll try to bring a takeaway from it, but a lot of times not, just because you never really know. A lot of the times,
Yeah. Can you
like
see it?
that could be a hedge. That
For
could
sure.
like some hedge fund could have $1 billion long, and then they buy 10 millions put contracts to hedge that position, and then you see that one and you think they're short, but they're really not. And I don't know, like anytime I look at any unusual options of any stock, any equity, whether it's an index, whether it's an individual stock, I see big put orders and big call orders. So it's hard for me, like, unless like you will
Sometimes it's a
get.
little more balanced, though. I'll show you what I mean. Can you see my
Okay.
screen?
Yep. We've got your screen pulled up.
Okay, cool. So I'm looking at SPY here. A couple of things I'm looking at. Tagged an anchored VWAP onto May lows, tagged it onto June lows, tagged it as well onto June highs. Those three anchored VWAPs all come in right here. So this is a very key level. You can see a lot of people are consolidating. They're comfortable kind of buying up to this area. They're not necessarily wanting to go above. When this crashes out below or crashes below, that's when you start getting some pressure and some pain. What we're trying to do right now is stay on the 5-day. So this is kind of a little bit of the line in the sand. So I did not like seeing this break below. I think that there are a couple lines that you could look at, right? You could see some of the other VWAPs I have coming in. This purple one, also great line in the sand to have. It's year-to-date anchor VWAP, which we now have 9 months of data. Pretty significant, I'd say, as a lot of buying and rebalancing happens beginning of the year. So when this again went below, you can just see drops, drops, drops. Now we come through these, drop. I think this is a day of short covering here and some small buying. I mean, look how low the volume is. I wouldn't be surprised to see further drop to the downside just because we're coming below all these pieces. It's even worse on the Qs really, just because, and don't mind all the random fibs that I've drawn in key levels. Hopefully that's not too bothersome. But as you can see, the lows here tagged, lows here tagged, we drop through, we're not above them. I want to get back above this before I go bullish. Line in the sand on the Qs right here is 292.92. As you can see, that was the low of the range yesterday, not including the wick. We're obviously coming back up a little bit above here today. And then there's just all these fibs that nobody else needs to pay attention to. That's a little bit of what I'm doing. But you can see similar thing. Year-to-date anchored VWAP came through, hit resistance, came back through and just plummeted. And that thing's worked really well, even kind of throughout the rest of the portions of the year. Whenever we break below it, it seems to just be a straight plummet from there. So something that I've been watching. And then I can also just, while I'm sharing for a second, just look at a couple of these stocks that we were looking at before, kind of on the converse side, right? Like you have an FSLR or like an EMPH where you're looking at it and everything's the opposite, right? Way up above that year-to-date anchor VWAP, and it's moving upwards, meaning even up here, people that have been owning this since the beginning of the year, they're still buying. There's still people that are coming in. There's still upwards pressure, upward sloping 200-day, upward sloping 50-day. It's good to see. And then the one thing I'll point out on the unusual options, we take a look at, we take a look first like FSLR. You'll see, it's small green, right? These are not necessarily like massive premiums. These are just some unusual options. Like, there's some red, there's some green, there's red and green throughout, right? It's kind of sprinkled and it obviously looks more bullish a little bit, but nothing too crazy. And you go on to SPY and you pull that up and it is just, a lot of short-term red, right? And clearly, even some of the green that's here, it's already in the money, right? So it's definitely, sometimes people play a little bit more safe, potentially a hedge, right? All those things. There's just a lot of red here that I'm looking at. And I completely agree with you. It's very difficult with an unusual option flow to use it as a way of thinking. So what I use it usually as a bit more of a confirmation, right? I'm inherently looking at the stock chart and saying it broke below these key levels. That indicates to me to look bearish. And then I look at the unusual options and I say, okay, also there are people with big money putting down bearish bets. Now, the chart lines up with the unusual options. I'll take those and kind of put those and mesh them together. That's a little bit more of how I use it for just a piece.
Yeah, no, and I think that makes a lot of sense as opposed to like using it as like an end all be all. Oh, if I see, people buying calls, I'm going to go long. If I see people buying puts, I'm going to go short just because like we said, you never know what their underlying positions beyond that might be. And I'm curious. I mean, I wonder how many of these people that are holding these SPY puts and whatnot, like are going to hold them through the CPI print next Wednesday. Cause that could be, I mean, I don't know, like the headlines I've seen are that you've seen like gas prices fall for 80 straight days, all this. If we get a good, because last month's, I mean, July's CPI showed no growth in inflation, but still it being very high. So if this one we see either again, like no growth of inflation, or even maybe that it drops a little bit, which it might be the expectation right now. I don't know. Maybe you do see the market rally a little bit and see these shorts kind of get squeezed out.
Yeah, I think you made a good point there with kind of the energy in the oil space. Like you were saying, today, I believe oil prices fell to the lowest point since before Russia invaded Ukraine, which was hard to believe, late February, right? So it has been a long time since it's been at this level. I think Brent crude dropped like 3% today. It's under $90 a barrel.
I was looking at, I've been checking this website, the AAA gas prices. That just shows you like broken down by state, and then you can see, a month ago, $4 was a little bit over $4 was the average. Currently $3.76. The highest price was $5.16. This was just the average price of gas per gallon across the nation. That was June 16th, which kind of coincides with the lows that we saw mid-June in the overall market. And if you, I mean, that's not that long ago, right? That's about 2.5 months ago. We've gone from the average price of gas being $5 a gallon to $3.73. I was even going through here in Texas. You have some counties where they're like dangerously close to being below $3 a gallon. Oh wait, I'm not sharing my screen. I thought this whole time I was sharing my screen. This was the site I was talking about, the AAA gas prices. You can see it broken down by state. Here it shows the current average, what it was yesterday, what it was a week ago, what it was a month ago. Highest price $5 on June 14th. Again, that kind of coincides with the low of the stock market. But yeah, I mean, going down into Texas here, you can see it broken down by county. There are some counties up here where the gas is almost below $3 a gallon.
Yeah.
Incredible. All right, Gav. Well, it was a pleasure to get you back on. Do you have any other thoughts, any other thing you would like to talk about before you leave us today?
I would just say, in this market right here, there's a few different ways to approach it, right? You can definitely continue with a DCA strategy, which I think is perfectly reasonable for people that are building up their long-term portfolios in retirement. If you're going to be actively trading, especially if you're trading something like options, which I know a lot of people are doing in this market, I would just be, content with at least taking small wins with some of your portion, right? If you're taking a sizable amount of contracts, maybe start trimming at even 5, 10, 15% versus what you would have done previously. It's definitely part of it. It's an emotional thing. It's a mental piece with it. But I think that there are a lot of people that were used to just sitting there and riding, right? 100%, 200%. And those are definitely out there. And if you can get those quick moves in the morning, they can happen. But taking these 5, 10, 15% wins has felt really, really good and has been, some of the advice that's been given to me. And then also just position sizing accordingly. It's okay. I think that there's this misconception that all your trades that you go into, you have to have the highest level of confidence for them. But I think it's okay to have different levels of confidence. But you just have to position size and, use stops accordingly on them, because not everything is going to be an A++ setup. The market's just unfortunately not that good every day. So you really got to go accordingly. And then also, if you want to have me back on for fantasy football and any other betting chats and stuff like that, I will come ready with prop bets and player props weekly. So just let me know.
Let's do it. Honestly, I was thinking maybe if we find a time, and I know you're super busy with Twitter Spaces and whatnot, but if we find a time that works for you well on like Thursdays, maybe we can just slot in like 15 minutes. So that way on Thursdays, we could talk about the Thursday night game, talk about the weekend games, get a nice little preview in there.
Yeah, for sure. I could see like a 2 p.m. or like even like right before the game, like 6 p.m., something like that working.
Yeah, hell yeah. I see last question for you. Pickle Jim's asking, will Rashad Bateman be a top 20 wide receiver?
It's a great question. Obviously concerned about the Ravens wide receiver core. I think it's a tough one. Top 20, I would love to see it. I personally did not draft Rashad Bateman this year in any of my leagues. I listen, Lamar's got to throw the ball to someone, but I think that's Mark Andrews off the bat. And then we'll see what Bateman can do out there. But he looks good. He was a first-round pick. He was coming off of an injury, groin injury last year, so he didn't play, 100%. And I'd love to see what he can do healthy.
Yeah, no Hollywood Brown, so gonna need, like you said,
that I'm fine with. That I'm fine with. Hollywood Brown couldn't catch a cold. Okay, that man, so many balls dropped. I couldn't take it.
Well, we'll see. Maybe if you do have Rashad Bateman on your team or you want him, maybe what will happen is that defenses are focused more on Andrews and stuff, and it leaves Bateman able to get some production.
Here, Ravens fans, keep an eye out for Isaiah Likely.
Isaiah Likely.
Isaiah Likely. Heard of him?
Nope, but I like the name. What college did you go to?
Isaiah Likely. Oh, man. Now you're asking the hard questions. I did know what college you went to. Was it Western something? Isaiah Likely. He's coming out of Coastal Carolina. He was a fourth-round tight end draft pick for the Ravens this past year. Balled out in preseason. Made the roster easily. No sweat. Had games in the preseason where he went 100+ yards and a TD in the first half. And Lamar seems to love throwing a tight end. So if Isaiah Likely can find those soft spots in the zones, he could be a good guy to have.
There you go. That's a good little sleeper pick from Gav. All right, I dropped your link in the Twitter, Wolf Financial. Go ahead and give him a follow if you haven't already. Gav, enjoy the rest of your Wednesday.
Thank you, sir. Take care.
We'll talk soon. All right, y'all. That was Gav from Wolf Financial. The link is in the Twitter. Go ahead and give him a follow. I'm going to be joining him on some spaces at some point, in the next couple of weeks. So if you want to give him a follow on Twitter so you can hear even more of me talk on Twitter spaces, then please do so. Be my friend. All right. let's keep it ticking. I see our next guest hanging out backstage. Long time no see, Mr. David Green was on with us yesterday. We're lucky enough to get him back on with us 2 days in a row. Rare that we get DG 2 days in a row. But Dave's gonna talk a little bit more about his webinar tonight. I know we saw some more questions about that in the chat, and I thought, hey, instead of me talking about this thing that I don't even know a lot about, might as well bring Dave on and let him talk about it. So let's give Dave our intro and get him back on the show. Mr. Green, happy Wednesday.
What's up, Aaron? I got to just start out by saying I love how you guys are a one-stop shop. You want to bet on basketball, football, baseball, trade stocks.
Stocks, yeah. If you want to put your money to use and maybe win some or maybe lose some, we're your place.
100%. Oh, that's too funny.
But you were on Wall Street in the, there's a crossover, right? I'm sure a lot of the guys trading stocks are the same guys that are betting on football games.
No question about it. And quite frankly, look, how many people that actually make a living gambling? Do you think?
Zero. The owners of the casinos? I don't know.
What's up, MD? Yes, the owners of the casinos, right? But there are some guys, even card players and stuff. I have taught a lot of card players how to trade, poker players, because a lot of the same principles apply. It's patience, it's discipline, and it's money management. It's actually all the same things.
Yeah, I don't even really see poker as like gambling because it's a skill game. Like people that are good at poker they're not gambling. They're calculating, they're good at what they do. There's different parts of it. You got to know the math. You got to be able to have a poker face and be able to read people. But it's not the same as people like picking football games and stuff. There's probably a lot more people that are able to make a living playing poker than there are being able to pick football games.
You would think so, but I think it's less than 1% of people who actually play poker that make a living doing it.
Holy cow.
Yeah. That actually
right, Dave,
make a living.
If you want to share your screen and show some charts, we can. Sure. But if you want to just talk about,
I'll leave it up there anyway in case something lines up. But
yeah, exactly.
I think everybody here, I don't know how many people here are with us, but you're probably all technical analysis out, right? Just got through with Wolf Financial, who those guys are great, by the way. Really, really smart guys. We actually have done a couple of things with them. They're really smart guys. What I want to talk about, and what I'm going to talk about a lot tonight, guys, at WallStreetGlobalTradingAcademy.com. The donuts are all still out of stock. What up, Chelly? Is how you guys are doing. How is everybody doing with their trading? What is holding you back? What are you having the biggest problems with? Are we getting out of our winners too soon? Are we riding our losers too long? I mean, look, everybody talks about technical analysis, right? And everybody has their charts, and they can put up their charts with 500 lines in them, and you can look at the lines in the charts, right? But that's not the hard part of trading. The hardest part of trading is knowing what to do once you get in a trade. So I really wanted to just come on for a little bit. We'll talk about anything that you guys want to talk about. I want to show you a couple of trades that's set up today, and we'll talk about trade management. Mostly cash until today. Bought some gas stocks, okay? Look at bulls, riding losers too long. Yeah, huge problem, Don. And what most traders will do, especially when they start out trading, is exactly that. They'll get into the trade, and they'll watch their P&L go down and down and down without getting out of it. And then when they get into a good trade, they don't take enough money out of it, right? That is a huge problem for most traders. Look, the mistakes that most traders make are the same ones that every trader makes, right? That's the bottom line. So it's very, very important when we get into a trade to get the most out of it. And there's a big reason for that. 90% of the trades we get in, right? I'm looking to make between 25 cents and $2 on a trade, depending on the price of the stock. Unless I'm getting into a trend trade, in which case I want to make more. So I want to show you guys an example of a trade that's set up today in First Solar and I'll walk you through how we want to make the most we possibly can out of a trade, right? Did you all see the crude oil drop? Yes, I'll talk about crude in a couple minutes. Not that oversold yet, but we're getting there. I'm starting to look at it. And nat gas. Nat gas is another thing I'm starting to look at. But we were watching First Solar. This is a stock we watch every day. It has been spectacular for a long time.
Yeah.
So early in the morning, we got a beautiful trade down here, guys. You guys know the moving averages that I use. This hit our 30 EMA right about 950 at 128 and change. All right. So I'm in this stock now. How do I get out of it? Right? In the first solo, I want to make between 50 cents and $2 on every trade that I do. And I'm never going to risk more than between 50 cents and $1. So once I get in first solo at 128, I will give that $1 stop. So let's say I have 100 shares. Once I get 50 cents in a trade to 128.50, and this is important for everybody, guys. This is what people screw up all the time. Number one, when I have a stop order, and if it goes down to my stop order, I get out. That's it, Don. I'm out. That's it. We're day trading. We're not talking about investing. We're not talking about a long-term trade. We're talking about day trading. We're going to be wrong, right? I think we had 5 or 6 setups today. We were wrong on 1, and we made money on 5. So you're going to be wrong. Everyone's going to be wrong in trading. Get used to it, right? Having a losing trade don't mean you're a loser. So we take 50 cents out of our trade at 128.50, immediately raise your stop up to break even. So now you cannot lose any money on that trade, right? How many people in the room don't take any profit? It goes back down to where you bought it, and you end up losing money. A lot. And that's a huge difference in your trading. Think about it. At least if I took 50 cents out and then I break even, that's great. If I don't take anything out and then end up losing 50 cents on it, well, that's $1 swing. And if you do that enough, it's going to be very difficult for you to ever make money trading. That's why we have to get much more out of our winners than we do in our losers, right? So we're in at 128. Great. Let me sell some for 50 cents. Let me sell some for $1 at 129. The last part of my trade, I am going to hold until some kind of technical analysis tells me when to get out of it. And if you look up here, we had a pivot point of resistance right around 130. And that's what's telling me to get out of the last part of my trade, right? So that's $2. $2. So I sold a little, lock in profit. I sold a little more, lock in profit. And here's where it's telling me to get out of it. That's a $2 trade on my last little bit, right, guys and girls? And there's no reason. Here's what happens, especially with a lot of beginning traders, right? They're afraid to make money and they're afraid to lose money. I hate to say that, but that's what happens. If I'm getting into a stock for a technical reason, I'm not getting out until I have a technical reason. So on that last part of that trade, that is a $2 trade. I'm going to make $2 on that last part of my trade. One big thing, guys, right? Every time I don't respect stop losses, I get killed. And every time I respect, it goes back in my favor. Yeah. So, Don, what are you saying? You get into a trade, it knocks you out, and then it goes back up, right? 2 things that you might be doing wrong there. You might not be giving it enough room, okay? We're going to talk about this for 2 hours tonight. I want everybody to come. It's a free webinar tonight at Wall Street Global Trading Academy. That's all we're going to talk about tonight. It's fixing traders' problems. And I guarantee you after an hour and a half, we're going to fix a lot of the problems that you have. Here's another one that's set up, guys and girls. And this one was even better. Check this out. So again, we come down to our 30 EMA around 129. Let's call it 129 to make it easy. Okay? Stock never threatened to go against us at any point. We take 50 cents out of the trade. We take $1 out of some. And now we're up $3.20 on the last little bit of our trade. So there's no reason to get out of that last little bit of the trade. If it got to 132.70, which is our resistance, I want to get out of the trade. Let me look at Tesla. We might have a trade setting up right now. Let's take a look. Tesla, we had a nice trade early this morning. We had a double top trade that set up a few minutes ago. How close do we come here, guys? Let's see. So we're just bidding here on our 65 EMA in Tesla to buy the stock. It would be down from $280.50 to $277.30. So I was looking to buy that stock. So here's a good tip though, guys, right? Let's give it another minute or two and see what happens. But if a stock comes very close to hitting one of our levels and doesn't quite get there, and this is a good tip for anyone who's making any trades, chances are if it goes back to that level, usually it's going to break through that level. Usually. All right? So I want to give it another 30 seconds here. And wow, guys, now we just missed it by 3 cents. Right? Check that out. We just missed that trade by 3 cents. So now, again, when it comes really close and we just miss a trade, we don't want to buy it. We'll look for another level to buy it now. Usually, when a stock tests this level a couple of times, it's going to break through it. Usually. So the next level we have is down around 275.20, which I really love. That would be down $2 and hit our 200 EMA. I would be an aggressive buyer down there in Tesla. We'll see. It just hit 40. It hit the 30. It just bounced up 30 cents. Yeah, it's working already. So again, let's just say we executed it. We got in at 277.30. I would sell some for a 40-cent profit at 70, and I'll bring my stop up to break even so I cannot lose money on that trade. Very, very important. Once you have a profit in any trade, don't let it turn into a loser. I will never turn a winning trade into a losing trade, and I'll never turn a winning day into a losing day. So let's get prepared just in case we get a smack attacker, right? 275.21. And I will be aggressive down there, even though it's Tesla, right? So I'm going to put out 200 shares in Tesla to buy down there because I really like that level if we spike down. 275.21. This is how we spend our whole day, guys and girls, looking for these opportunities for stocks to set up to give us a trade. Show you the order. We do trade live every single day in real time. Let's make it. So my whole point about this, guys, is that it's more important to know once you get into a trade what your stop order is and what your profit targets are than actually figuring out where to buy and sell the stocks, right? And again, I know you guys have been listening to technical analysis till you're blue in the face again today. So anyone wants
I think most people with us they like the technical analysis. I see some folks in the chat talking about Fubo. Have you checked out Fubo stock at all?
No, let's take a look.
This thing's got
wasn't this a high flyer at one time? If I remember.
Oh yeah,
correctly.
it was like at least $60.
Yeah, I mean, I'm showing back to $35 and now down to $2. So here's the gig, right? What do you want to talk about in Fubo? I mean, I'm sure there's a lot of people, and I have people coming to me all the time that are probably stuck in this stock somewhere. I would assume, right, Aaron? I mean, why?
Yeah.
Otherwise, there's no reason to talk about it. You know, you're basically in a lottery ticket now, right? And depending on where you got in it, you're basically in a lottery ticket. It had a nice bounce up one day to $7, right, about a month ago. But now it's a lottery ticket.
I think a lot of people have been there's some high short interest on there, so there's been people that have hopped in here as the next potential short squeeze.
Okay, so then I would look at options, right? Look at I don't even know if they have any, but let's take a look. Let's take a look and see if they have any options. So yeah, we have options in Fubo. They have dailies, they have weeklies, they have monthlies, right? So, I mean, let's go out 23 days and see what's going on. All right, you're at 350. So check this out, guys. If you want to go out a month because you think there might be a short squeeze in this, you're paying $12 to get a 5 call. That's the way to play this stock, right? You don't need to get involved with buying shares. You're paying 12 cents, right? 12 cents. You buy one contract that costs you $12. You're going out a month. If you think there's going to be a big short squeeze, good. You want to invest $100, buy 10 of these. If you do get that big short squeeze, you can make a lot of money. If you don't get it, you're only risking $100, right? So isn't that a much better way to play this than actually buying the stock, right? Aaron?
I think so. Yeah. I think so.
I mean, look, I might do something with that going out a month, right? I mean, it traded at $7, right?
Yeah,
I'm going to buy a couple of them.
You need one crazy day, and then you make some money.
I'm going to invest $24 in this and give myself till September 30th, 2 weeks. Here we go. Boom. I just invested $20. But that's the way you play a stock like this. Right? You don't want to buy stock because it can go to zero. All I can lose is $24, right? That's it. So if you're ever in this kind of situation, guys, right? We bought a 5 call, guys, going out 23 days. Again, this is a lottery ticket. Invest a couple of bucks if you want.
Yeah, just for fun.
Yeah, just for fun. I know what I can lose, and maybe you get one of those days it spikes up to $7 and you sell them for $2, right? That can happen. Let's see where our Tesla is now, guys. Look, I don't mind talking about technical analysis. You know that. I'll talk until I'm blue in the face, right? So Tesla, yeah, I mean, Tesla gave a 70-cent trade off that level. Got the 278.09. So there's your little trade in Tesla. It held the 65 EMA, gave you between 50 and 75 cents. If you win, you get how much? All right, Raul. It depends on where the stock goes, right? Let's say the stock goes to $7 and we bought a 5 call. So the things that we bought for 12 cents will now be worth $2. So it costs us $24 to buy 2 of them, and we make $400. So you'd make about, I don't know, 100 times your money. But again, it's a lottery ticket, right? It's a lottery ticket. And it has to go over 5 or get close to it, correct. Fubo $20 gap fill by what date?
I don't know if this thing's
$20
ever.
gap
I don't know if this thing's ever getting back to $20.
Again, you could probably buy those options really cheap. I'd be shocked if it gets back to $5 or $6. You never know. Those are the kind of things that I don't mind. Look, everybody should have a portion of their portfolio in some of these things that you don't mind if they go to 0, right? But what I don't want anybody doing, and this is happening a lot to people, is getting caught in an HKD that went to $2,500, right? And now it's trading at 60, and I don't think it's worth $12. Not getting caught in this, what is this, SPHP? Was this another one, guys? SHPH, right? Not getting caught in this at $126, and it goes to $11.77, right? So, I mean, those are the ones that you want to avoid. Mike, you bought stock and options yesterday in whatever it is. Fubo. All right, let's see if Tesla's going to come down to our level now. Are we breaking down a little bit? Yeah, we're kind of just hanging around this level. It's 12:35, right? This market is dead, and it's probably done for the day. We got some Fed speak coming up the rest of this week, I think, right?
Yeah, I know we have CPI next week. I don't know. Let me get my economic calendar pulled up. I don't think there's anything.
CPI is next week, yes. I think we might have the Fed minutes today or beige book. Something's coming out today.
Beige book, 2 p.m. What does that mean?
Beige book is a measure of economic activity across the entire country. Sometimes it can move the market. Look, these days, if they want to move the market, move the market on a number, they can move the market, right? It doesn't matter.
Yeah, Lael Bernard is speaking right now.
Okay, there you go. Yeah, I mean, UPST was another one, guys, right? Same thing. I mean, this stock was $401. Anyone out there ever think when this was $400 that it would be $22? I don't think so, right? Now, here's what happens when you're in a stock like this and you're stuck at 400. You're adding to this stock all the way down, right? Unless you just take your loss, and that's how you blow up trading accounts. I mean, it doesn't take long. One of the first things we teach everybody is stay away from those things. I'll trade them. I'll trade them all day long, right? AMC is another one, and this guy, whatever. You guys know how I feel about AMC. But this guy is such a conniver in my mind. I mean, he issued all these ape shares to everybody to buy them. I think it was 6, whatever it was, 650, so that he can raise money to pay down debt. They have like $12 billion in debt. They could not legally issue any more shares in the stock because they would have never gotten shareholder approval. So what does he do? He creates another stock, right? And anyone who bought that one's already down 20%. So I don't know. I just don't stay. I stay away from all those things. I don't want to be involved. I will trade them, but that's about it. ECB is waiting for a decision today too. All right, cool. Yeah, crowd's moving up a little bit. Maybe that 170, 120 for a little short. I hate trading during this time, guys. It's just there's no volume. There's nothing to do.
Yeah, Go ahead. I was just going to say, at this point in the day, especially, I mean, it's still, we're going to take a couple of weeks before, people on Wall Street are back to full force from the summer. It's just kind of dead around these times now. I'm looking at, just doesn't seem like a lot of movement. Although I do think, or at least the economic calendar I'm looking at right now.
A lot of Fed speak.
Yeah, Vice Chair Lael Bernard speaks, but she's typically pretty dovish.
Look, I don't think any of that matters anymore. The last they came out, they were extremely hawkish, right? I mean, I don't think it matters anymore. I think we're going to get, at this point, I think 75 basis points is priced in. That's what I think. A lot of people were saying 50, 70. I think 75 is priced in.
And Powell speaking before the market opens tomorrow.
Oh, there you go. Okay. Watch Apple pushing the QQ. Jay, you know Apple's my favorite stock of all time. Yeah, look at the SPYs. We're really spiking up here. So
what about some of these stocks making all-time highs? There's a couple solar names making new all-time highs. First Solar, FSLR.
Yep.
You know, and then I think we talked about Ulta yesterday.
Yeah, we talked about Ulta yesterday.
I mean, there you go. I don't know, and a lot of times I think people shy away from wanting to buy stocks at all-time highs because it goes against, you know, it's kind of like conventional wisdom. You want to buy low, sell high instead of buying high. But I was doing some more digging. I was doing some more digging into Ulta's business, and maybe I'm looking. I can see right now on your screen the RSI. It's approaching, I guess, overbought territory. But as far as the fundamentals go, this company is not really expensive or anything like that. I mean. The PE I want to say is like 20, price to sales 2.5. Like it's a very strong growing business. So the fact that it's making new all-time highs doesn't necessarily really scare me off.
No, and it's not really stretched out yet. Okay, I mean we're 18 points above the moving average, but when I look for a reversal, Aaron, I'm looking for an 80 RSI, and I'm looking for at least 3 days up in a stock. So to me, this stock still has room to go. Like this stock could see 450, 460. Again, I'm not telling anyone to run out and buy it now. I don't think I would. You know,
I think it's. Oh wow,
we up the last day, but you know, I don't think I would. First Solar, you know, this is part of all Biden's plan, and this has been a beautiful looking stock, guys. If you just go back on the daily.
Wait, hold on. You did. I was talking about how Bernard. She's talking. She's usually pretty dovish. You were saying it doesn't matter. The market's looking like it does matter. The Qs. I'm seeing the SPY and Qs spiking up right here. It sounds like, I don't know what she said, but it sounds like maybe some market's liking something.
Yeah, I mean, when I say it doesn't matter longer term. They're going to do what they're going to do, and that's when the market's going to react.
Oh, yeah.
I mean, they could slap the market around on anything anybody says now, 100%. I'm talking about a little longer term. I'm looking for some resistance on the spiders to get a little short here. Let's see if we got anything. 397.21 is the 30-minute. We ain't getting there. I don't think we're getting there. And it's not the 30-minute. Let's go to a daily on the spies, because I know, what was his name, Matt from Wolf Financial? Was that his name?
Gabriel.
Gob?
I don't know. I always thought it was Gav. And it's GAV, so I always thought it was Gav. And then I was like hanging out with him one night in Vegas, and he was like, you know, it's actually Gav. It's like I think it's a Jew. It's Gabriel. It's like Gabriel with a V. I don't know.
Yeah, Mike. TAN is the solar ETF, right? Yes. Mm-hmm. Yeah, I mean, spiders are they're horrible right now, right? They're horrible. We're in our first resistance isn't up to about 399. So we could easily test 399 again, right? I don't think we turn again unless we get above 405 again, and really 426. You know, so we're in nowhere's land now. Check this out. On our daily, on our weekly, we're in nowhere's land. It's encouraging. We're getting a nice little bounce here. I'll tell you that from yesterday's lows. That's nice. But, you know, we have room to 399 if the spiders want to go up from here. So I'm not in a hurry to get short. Let's just see what happens. What happened to QQQs, Ken?
I don't know. But Dave, give me another quick rundown on what to expect tonight for any folks who may have joined us in the last 5 minutes or so.
Yeah, got it. Okay. So what we're doing tonight, I think we have over 500 or 600 people registered. Usually when me and Pete do a webinar, we're giving you a bunch of technical analysis. We're helping you set up your charts and stuff. We're talking about some trades that might have set up, which we will do again tonight. But tonight is going to be one of the biggest questions we get from everybody is a couple of things. How do I get started? And how do I fix what I'm doing wrong? Right? Usually nobody comes to us that is knocking the socks off trading and making a gazillion dollars. If you do, God bless you. I still think we can help you because we can probably get you to another level. But 9 out of 10 people who try to do this fail, guys. It's just a fact. If there's 300 people in here, 270 of them who try to trade it's not going to work. It's just a fact, right? So what I have tried to do and what Peter has tried to do is try to teach you guys, number one, what not to do. And that's half the ball game. So we're going to talk about that tonight, what you should not be doing. We're going to talk about how to get the most out of your winning trades. We're going to talk about you guys Never turning a winning trade into a losing trade, and just answer any questions that anybody has. What are you having problems with? How can we get you back on the right track? How can we help you to stop making the mistakes that you're making? So it's going to be for everybody. It's just for you guys. It's free. It doesn't cost anything. Come and hang out. Me and Peter always tell everybody, you come, you hang out, you don't like it, you leave. But we're trying to help people. That's what we do. We sell a course, which is over 20 hours of information. Yeah, oil's still going down here. Wow.
I mean, I'm not into any oil stocks here. I don't know.
Well, the one I would look at is Oxy, right? That's the one that I would look at if we get a big pullback, because Buffett's in this up to his eyeballs. He owns 50% of it, right? Whatever.
Well. I mean, here's the thing: so he owns right now 20% of it, but he put the paperwork down to buy up to 50% of it. So you gotta assume he is going to buy another 30% of the company. That's good news for it. I was looking at the financials of it. I mean, it looks really strong, but yeah, I mean, if we keep getting oil pullback and I see Oxy come down to $60 when it was just at 75, I probably will buy some of it.
Yeah, we were looking a little higher this morning, and it almost got there, right? We were looking at, check this out. We had 64.40. Okay, that was our daily 200. I think it traded there. It exactly traded at 64.40.
Wow.
And gave a dollar bounce off that level already. So check that out. To the penny, it went to 64.40. To the penny. Oh, we were bidding this morning and we didn't get filled. That's right. So what happens if we break the daily? Right.
Ari Stocks is asking for the link. I just dropped it in the chat. You can go to WSGTA.com and it'll take you to this link, or just click this link that I put in the chat, and then you should be able to sign up for the webinar there.
Yeah, so Aaron, here's a great spot where I will be joining you. 59. That is our weekly 30 EMA. So you're talking about low 60s. 59 is a spot where I will be starting a nice little investment in Oxy. And again, guys, it's all technicals. I mean, there's no such thing as a stock that can't go lower or can't go higher, right? That's why your technicals are so important, and everybody uses them. Yeah, there we go, MD. I'm looking right there, 58.91, right? We're right there. So we kind of held this first little level almost to the penny. It was the daily and the weekly. Check that out. We had two levels there. And that paid a dollar trade. No big deal, but it paid a dollar. So yeah, around 59 would be a spot that if we keep smacking.
Yeah, and I was talking about this stock too. I was kind of judging a book by its cover. Like, okay, here's this kind of boring oil company that Uncle Warren's invested in, who usually picks boring companies. But I was reading more about the company, and maybe this is just their marketing or whatnot. But it sounds like Oxy's actually putting a lot of investment into clean energy, into carbon capture, and that they've got some good technology there. And so I think, I'd like to think Buffett's not just looking at how much money the company's making right now, but also looking down the road in the future. And I think there are some things to be excited about with this company.
Yeah, and they pay a dividend, right? I'm trying to see how much it is. It looks like
I don't think it's much. I don't think it's much.
13 cents a quarter
compared to other energy stocks. Yeah, it's not great, but it's,
it's like a 1% dividend.
Yeah. Dave, all right, well, we've got some folks in the chat. I see that they're signed up for the webinar tonight. I might tune in depending on what I've got going on if I'm free. But yeah, folks, hit that link, sign up for the webinar. You want to learn, like Dave said, now is kind of a tricky time. So if you've got questions, if you want to learn how to from here manage your positions a little bit better, this is where you start. This is your step one. Join the webinar. Couldn't speak more highly of Dave and Peter. They know what they're doing.
And also, Aaron, if you do stop in tonight, I would love to have you talk about Benzinga for a couple of minutes if you want, to everybody that's there.
Yeah, beautiful. I'll do it.
100%.
All right, beautiful. All right, Mr. Green. Well, I appreciate you coming on. I know we were lucky enough to have you 2 days in a row. So everyone, all the 200 people watching us right now, smash the like for David. I'll drop that link in the chat one more time if you're interested in joining that webinar, and I'll see you all there.
Excellent. Thanks, Aaron. Appreciate it.
No problem. All right, folks, that was Mr. David Green. Link is in the chat. Yeah, if y'all see him tonight, you'll probably end up seeing me as well. So we've got about 9 minutes left. I want to take this time to go through this guy's Substack. This is from Andreas Steno Larson. Here, let me get I'll pull up his So it's this guy on Twitter. If you're active on FinTwit, if you're active on Twitter in general, like you may have seen this guy before, the macro trading floor. He's got his own thing. Macro aficionado, investment analyst, and Madridista. I don't know what that means. Director at Himstaden, host editor at Real Vision, hosting the macro trading floor. He's got 130,000 followers. Copenhagen. I read his Substack post the other day, and I'm not even like, I don't know. I'm not really, I guess, highly convicted either way. I think I'm. Oh, why were people making fun of Andreas last night? I don't know. I'm more on the side where it's like, and I brought up the individual sentiment earlier. If I see everyone talking about, I'm not like a contrarian in the sense that every single, like, I want to take the devil's advocate viewpoint on everything. I want to, but if I see everyone talking about, like, especially like retail investors talking about how Germany is going to run out of energy and Europe's screwed, I'm going to be like, all right, where's the other side to this? I want to read the viewpoint of someone saying, hey, things aren't that bad, and then be able to make up my mind. So this is just a little kind of devil's advocate. Probably you're not going to see this viewpoint thrown out a lot there, especially while retail is mostly bearish right now. So we say, no, Germany is not probably running out of gas. The media is full of doom and gloom around Europe, and even though the situation is admittedly bad, I tend to think that the likely outcome is less bad than feared by many. Here's why. And right away, I was kind of vibing with this, and here's why, is because I like someone who's able to say, yeah, the situation's bad, but not necessarily like, hey, this means we're going to see 08 recession, the whole economy is going to shut down, people are going to be dying, right? Like, I think we should be able to more talk about, like, things, not having to sensationalize everything and get to these huge extremes. So I like the fact that, and he's not even saying, it's like, he's not like, oh yeah, everything's fine, everything's good. He's saying, no, things are admittedly bad, but here's why it may not be as bad as some people out there may make it to be. And you have to consider that a lot of these people that are out there, like, sharing this stuff about Germany or UK energy situations are short. Like, they have their confirmation bias. I'm not short. I'm long right now, so full disclosure there. So my bias might be saying, okay, it's not as bad as it is, but I don't think I really have those, like, blind. I'm not really long well, Shelly, we're gonna get to it in a second. All right, let's get to. I'm not long, like, in terms like all 100% of my cash is super long. I'm buying TQQ. No, I'm more net long than short right now. But if I saw information, if I saw data that would really make me believe, okay, shit is really going to hit the fan, then I think I would change my position. All right, let's get this out of the way. Yes, the energy situation in Europe is bad, but are we really looking into some sort of zombie land scenario where every European is desperately chasing heating and electricity? Well, a lot of people on Twitter would make you think so. I think the answer is no. Just look at the price action from this week in German power price 1 year ahead. There's so much speculation distorting the real picture. So this was from August 31st. This was a week ago. So maybe some things have changed in these kind of energy futures markets or not. I'm not sure. Let's break the whole energy debacle into three pieces: inflow, storage, and outflow. Putin is expected to turn the gas tab completely off, thus really putting, and I think by the time he put this out last week, and now that's actually happened, they said the Nord Stream pipeline is off, putting the nail in the European coffin for the winter, right? But do you remember your first microeconomics and the lessons on profit maximization and monopoly oligopoly? We were taught that MR equals MC, not that the monopoly would completely stop selling. Now, of course, there's a difference between talking about a company operating in a monopoly on a theoretical level and an irrational dictator in the real world, but it is still justifiable to believe Russia will soon deliver some gas to Europe during the winter. Remember that Russia flows are currently running at roughly 20% of normal, and yet the total flow is not that bad. Germany has other suppliers, and they have taken steps to safeguard the flow already. Just see the export development below. So here's how you can see in the orange bar, you've got export, the Germans turning off their own gas port. Germany basically stopped exporting all gas. That fill level's coming up. So good news for Germany there. So that's the inflow. What is the outlook for storage? Well, Germany will have their storages filled well before the 1st of November. Since Russia invaded Ukraine, Germany has saved its own natural gas and been filling their storages, which are now 1 to 2 months ahead of schedule. Storage-wise, they should easily reach 245, don't know what that means, TWH, by the end of 1st November. That, of course, doesn't help a whole lot if the inflow completely dissipates, but will Germany run out of gas? In most scenarios, they won't. Now to the outflow part. So essentially, and I'll drop this link in the chat for anyone who wants to come in here. But for people that are really looking into, you know, the energy situation in Germany, and I've seen this from more than just Andreas, that, hey, look, things are bad. But as far as in the UN, in the developed nations, is it more likely that these companies are going to be able to figure out some sort of solution to where people aren't, you know, freezing to death and not able to go to turn on the lights in Europe, in the UK, in Germany, in whatever country you are? I'm willing to make the bet that, you know, these things normalize. Here's a German power price 1 year ahead. So you can see, you know, a big expectation and a drop in power here starting in the end of August. So yeah. Yeah, so I mean, good points made here. Fear gets views. Parabolic always revert. Parabolic moves up always revert. Winter will be bad for sure, but maybe not apocalypse. Germany not freezing. FinSwit zero hedge don't like. And that's basically my view right now. Is that, yeah, the winter will be tough. Probably tougher than previous winters. Maybe people have to cut back a little bit. But is it really going to be the apocalypse? I don't think so. And there probably will be a lot of people who are out there short that don't like the fact that people are okay. And that's what I hate, is that, like, I'm not going to put myself in a position financially that I'm rooting for people to be out of power. I'm rooting for small businesses to have to be shut down in Europe, right? I'd rather be on the side that I'm rather be glass half full, optimistic that things are going to work out, that things are going to normalize. We've got about 2 minutes left. Javi, you want to come up here real quick and talk about CCC? All right, I've got 2 minutes too.
Rick and Morty, what's up?
All right.
Ready?
I don't know if that mic's on, so you're just going to get close. All right, so Javi's our head cannabis director. We've got our CCC starting next week in Chicago.
Let me get my Benzinga swag on.
Oh, my. We don't have time. You got 30 seconds.
Look at this.
Oh, okay, he was quick.
Boom.
He's got the limited edition old T-shirt. CCC, what are you most excited for?
I mean, this is the best of the best. You know, the best conference in the entire world, the most successful cannabis business and finance conference in the world. No other conference sees people raise more money than the Benzinga Cannabis Capital Conference. September 13 and 14 in Chicago. We'll be at the Palmer House. Every major MSO will be there. Every major Canadian LP will be there. 90% of the cannabis market cap, celebrities. We have, you know, everyone, you know, former athletes, rappers, musicians, of course, investors. I mean, it's the best crowd I've seen, and I've been to a million events. This is by far the most interesting event you will see. The content is great. The attendees are top notch. I mean, it's one of those things that you people regret it every time they miss it. They go like, oh, I couldn't make it, and suddenly they text me after, and it's like, oh, everyone was telling me I should have been there. So be there or be square.
Hell yeah. I'll be in Chicago next week. CCC, join us. Like Javi said, be there or be square. Thanks for hopping on, Javi. Guys, stay tuned. We've got Money Mitch starting up. Money Mitch will be talking about, if you're interested in this Apple event, we'll pull up the Apple stream for a few minutes, I think, do some commentary on there. He will be talking to Matt Orton, a certified financial analyst, chief market strategist at Carillon, and then as well with Ben Axler, the CIO, chief investment officer of Spruce Point Capital Management. Ben Axler and Matt Orton coming on Money Mitch. He'll also be talking about Apple, so do not go anywhere. This stream will redirect you to there. Until tomorrow, stay green, peace and love. Guys, tomorrow, NFL football starts. We made it. Smash the like. Follow me on Twitter at AaronBree5. I'll throw that in there one more time. AaronBree5 on Twitter. We'll be watching some football tomorrow. Love you guys.
This is Ben